Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Well, everyone, my name is Rob Clayton and thank you for joining me. Well, since the Federal Reserve's interest rate announcement and its outlook on 2025, investors have remained somewhat spooked as the policy statement projected only 2 rate cuts for next year, down from the previous forecast of 4. The Federal Reserve delivered a heavy blow to the market, revising its outlook on rates and inflation, which triggered a steep sell-off across the board. Looking to next week, the personal consumption expenditure, or the Federal Reserve, the PCE price index, will be closely watched before the holiday shortened week. With persistent inflation on the Federal Reserve's radar, all eyes will be on the core PCE. So looking at the technicals, there is still somewhat risk to the downside for the Australian dollar as the bears lurk, which could see a move towards 61.75 or down towards a region of 60.60 to 61 cents. Any bounce to the upside would need to clear the region of 62.80 to encourage further momentum and look on towards the region somewhere around 63.5. The euro dollar ended unchanged after posting an inverted hammer after the Federal Reserve delivered a heavy blow to the bull market. Nevertheless, looking at the technicals though, we can still see there is support coming in around 102.90 before any upside call, and from there may see a rally onto 105. I feel the dollar index is slightly overextended as it trades around 108. Nevertheless, the market has found a little bit more momentum due to the hawkish statement from the Federal Reserve. Turning to dollar yen, we're breaking out to the upside and now leaves a neutral bias until 159 figure 10 zone. Reason behind that is that we're seeing stops going off as the market is no doubt short following the Federal Reserve's rate decision and the Bank of Japan's surprise to move to keep interest rates unchanged at 0.25%. The BOJ's decision with an 8-1 vote split took market participants by surprise as many expected a 25 base point hike, but that didn't come through. So looking at the technicals, as I say, no view until 159 figure 10, and if we get a rejection from there, looks back towards the support level around 156 and down to 154. Turning to the pound, also remains volatile as the Bank of England followed the Federal Reserve's hawkish cut with a dovish hold at 4.75%, surprising markets with a 6.3 vote split rather than the expected 8.1 decision. The split decision highlighted differences on views on future monetary policy, with some members advocating for a 0.25 point reduction while others preferred a wait-and-see approach. With no major economic data seen, all eyes, as I mentioned, will be on the core PCE or the personal consumption expenditure next week. Turning to the technicals, the market is pressuring this support level seen around 124.2070 area. And if we see a bounce from there, which I do anticipate, there's a bit of divergence here, then a rebound looks towards 126 and reassess. Gold was also whipsawed and may have ended in a dead cat bounce. Referring, the fact is that the market rally ended with no momentum and could see a little bit more to the downside towards 2,578 or maybe finding around 2,560 to 66 before any upside attempts. I won't get too bearish down here just in case, like previously, we saw a very strong rally that took it back to 2,700. Wrapping up with oil, the market is still somewhat weak but still holding steadily around that $66 to $68 band, and therefore could see a rise on towards the region of 70 to 72, which is the preferred call. Well, that's a wrap. Thank you for joining me. As always, look out for the interest report. I hope you enjoy the great start to the new weekend.